Good morning, Futures family and Topstep Team Topstep. It's time for the market prep. It's Thursday, June the 29th. My name is John Hoagland. Thanks for trusting me with your time. As always, we are going to be focusing on seeking accurate context, always thinking about risk management and remaining patient in our trading. I apologize for being a little bit tardy this morning. Funny, I don't feel tardy, but we are tardy nonetheless. We've got a lot going on here at Topstep. We've got a lot going on here in the markets. We got a lot going on the broadcasts. We've got a lot going on as far as economic numbers. We have today at 8:20 Make Hoag Money, and then at 10 o'clock we have our good friend Jared Tendler going to be with us talking about performance. This is one of my favorite segments that we do here, and I know we're all looking forward to seeing Jared. I want you to all join me in congratulating Jared. He qualified for the Philly golf tournament, so we'll make sure and let him know that we are proud of him for that. And we are looking forward to, again, an interesting trading day today. As far as economic numbers are concerned this morning, at 1:30 a.m., Chairman Powell spoke at the ECB meeting over there in Portugal, and he mentioned that most Fed members are seeing two more rate hikes. Now, that may also be exacerbated by the GDP numbers that came out today. They were forecasting the third version of Q1 GDP at 1.4%, came out much higher than that at 2%, so a pretty big jump there. Jobless claims also out this morning, looking a little bit lower than expected. The initial jobless claims was expected at 266,000, came out 239,000. Continuing jobless claims also lower. They were looking for 1,765,000. That came out 1,742,000. So Chairman Powell has said that one of the sticking points for continuing to raise rates or hold on rates is the employment situation, with fewer people trying to get unemployment, which is the jobless claims numbers. It's then the question becomes: are they giving up or are they getting jobs? And if that's the case, we're going to see some strong employment, and that's one of the sticking points for the FOMC to cease raising rates or whether they're going to continue to raise rates. We are waiting for more information this morning in the form of pending home sales, natural gas numbers, and on the calendar I see at 2 o'clock, one of the FOMC members, one of the talking Feds, Bostic, is due to speak. So U.S. stock futures are still set to open higher after the GDP numbers and the jobless claims numbers. Kind of a muted response, if you ask me. In the equities, we see some pretty big responses in the 10-year, and in gold, it looks like, had a pretty stark reaction to those numbers. But there was, some good news actually yesterday and in the overnight, in the form that the 23 largest U.S. banks passed the Federal Reserve's stress test, indicating that they would be able to survive even a severe recession. So the banking system seems to be firming up. We know we had some recent issues with that, and apparently at least the largest banks are set to survive something like that. The ECB meeting in Portugal sees most central bankers remaining hawkish, suggesting higher rates for longer. Tomorrow, probably the biggest number we're going to have this week, the PCE numbers now are really going to become the next shiny object in the focus of investors and traders. It will also be closely watched by the FOMC, and remember the FOMC meeting is the end of July here. I think it's the 27th and 28th, if I'm correct on my dates, but it's right around there. So we've got that again to look forward to. As far as the VIX this morning, prior to the number, looking at it, it was 13.5. up slightly, but lower than what it was at this point yesterday at 13.78. The dollar down a little bit, 102.83, even a little bit lower than it was yesterday at this time. Yesterday at this time it was 102.9, and the yield on the 10-year a little bit of a jump this morning, 3.8%, where it's been hovering right around 3.7475, which is where it was yesterday at this time. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, love, and everything else is always welcome here on the Market Prep. And don't forget to subscribe to our YouTube channel so you can get notified when we do go live. I see Casey first in the room this morning winning the prize. Jimmy Decker, good morning, Rooster. And Jimmy, yeah, Casey robbed everybody first in the room this morning. Futures trading today. Good morning, Caprice, Josiah. Good morning, Jason, Jimmy, Theo. Don't give up, Jimmy. We'll get you there. Shaw, good morning. GDP coming in hot. Happy Thursday. Lacey says good morning, although she's not feeling all that good this morning. I don't know what's going on with her, but we'll be kind of keeping a close eye on her. Fred was looking for a bigger reaction, but again, the market doesn't really care what we hope for. So we're going to take a look at these charts shortly and see if there's anything that we can see. I've got a couple of notes here to just remember to trade what you see and think about risk first, right? Dan Trader, good morning. Will, Alejandro, Matthew, good morning. Scott Saw, and he conquered. Chaz, Bill, good morning. J-Man, my brother Tom with us again this morning. It's always good to see you. I love you. And man, do I miss my brothers. Denise, good morning. John, Khaled, Charles, Jason, Genghis, Brody, Travis, good morning, Grounds Hero. And my other brother is here. I see where I got lost here. There we go. Henry, Hegel Matters, Dr. VJ, Kaylee, Sarah Hall, prayers and love to you as always. Casey, he's apologizing to Jimmy Decker. Couldn't resist when he saw the empty room. I want a cookie. There you go. Jason Nasdaq, George. Again, Lacey says good morning, but she's kind of relaxing, not feeling all that well this morning for some reason. Mitchie and Nisa, Vince Scott, my guy, good to see you this morning. Robert, Dan Trader, Shaw, got my pencil. Give me something to write on, man. Yeah, right. Dan Trader, this day in history. Happy birthday, iPhone. I guess today's the birthday of the iPhone. Well, love it or hate it, it's here. Dan Jess, right? Rick, my other brother's here. Man, I miss you guys. We have got to get together soon. Trader, Phil, Rusty Golfer, my spirit animal is here. Edward, Stephen, Grateful American, God bless America. Absolutely. The Stash, Alfred, JD, and JT, good morning. Rainy. So we've got a little bit of a late start this morning. We want to get to Make Hoag Money before the open. So let's dive right into the charts. Don't forget about Make Hoag Money here at 8:20, and then our section with the great Jared Tendler at 10 o'clock. A few things going on around here you may have noticed. We're just going to have to be patient and wait and see what happens with that. So this is the S&Ps, the daily. Okay, finally, we see an increase in open interest on an overlapping to higher day. Is this good news for longs? Well, of course, I'm thinking it probably is. Finally, we're seeing some money coming back into the market after seeing the market kind of losing open interest over time. So to me, this is good news. I'm not ready to grade this upside auction here just yet. I'm not maybe a true believer, but again, I'm going to be trading what I see today if I do anything. Data heavy day, 2 days, today and tomorrow. A lot of digestion going to happen today. The PCE tomorrow is probably the biggest number we're going to see this week. So keep that in mind. You may want to keep some of your expectations reasonable as far as profits targets are concerned, because a lot of traders will probably be positioning and hedging themselves for the PCE numbers tomorrow. Here's the 30-minute chart. So, what happened yesterday? Well, we had a slight delta divergence that actually kind of pushed prices near the highs close to the end of the day. Hang on a second here. What didn't happen? Well, we opened in an area that would bode for potential repair. In other words, trading to the high volume node here and the high volume node here in a double distribution trend day. We weren't able to reach the lower level of the potential repair, which to me is a bit positive. You can see now where we've actually started going from lower highs and lows to higher lows and highs. So we've got a little bit of a change here. I'm not ready to throw a big party here just yet. Now we're starting to see the equities feeling a little bit of the pressure of what that GDP might mean for the FOMC. So we're not going to be opening with a gap. Yesterday in the S&Ps, what also didn't happen was there was no migration of value. We had an inside value day compared to the previous day. We would have had to move pretty far to have an overlapping or a outright higher day yesterday. So with the no change in value, the overnight high reached our next naked point of control. That did not happen in regular trading hours. Markets coming back. Overnight inventory might be getting a little bit short now, but it's bringing price back into range, back into value, which means I'm probably going to stay patient, especially the fact that there was no change in value yesterday. So the fact that value didn't move yesterday from the previous day indicates very little change in the perception of value. The one good thing that I'm seeing is the fact that we did have some bit of delta divergence yesterday in addition to an increase in open interest. So it looks like we brought money into the market yesterday, probably to the upside. Maybe they're going to protect some of those levels today. So no gap, overnight inventory, maybe getting a little bit short. Here's the TPO chart. Was that a late spike yesterday? Not in the equities, not in the S&Ps. This was actually excess, right? We did not have a late spike yesterday in the equities at all. The initial balance was the low of the day from yesterday. We have a normal variation, neutral trading day. Again, value inside the previous day's value. We did leave some excess up here. What we did do, again, something that happened yesterday that did happen was we took out the week high from the previous day and left excess above it. Look at our overnight high. Our overnight high traded all the way to this naked point of control, but that did not yet happen in regular trading hours. Today is, I think, all in going to be in the digestion of the GDP numbers, which were a pretty much of a shock or a boost into the GDP, and what traders and investors think that's going to create in action from the FOMC. But we've got a long time. It's a month basically before the next FOMC meeting. And as we always say here, anything can happen. Anything can happen. Okay. Yes, we do have a new link for Make Hoag Money. Here it is. I meant to put that in. Here it is. So you can get into the Zoom meeting. Oh, thanks. Thank you, Jack. You've already put that in there. I apologize. So, all right, back to the chart here. So neutral, excess high above a previous week high, in value. We're going to be still kind of remaining inside the repair area, which I don't think necessarily changes the market state to the upside that much because we have the breakout of the bull flag. I mean, technically, the market could come all the way back to the top of the bull flag and then go. So, the idea that we're opening in range and value. Again, just suggest to me, let's stay patient, let the market establish early ranges, maybe the initial balance, and focus on those extremes for our opportunity. Crude oil now open for a few minutes. We lost 11,000 in open interest. Now, think about what range bound trade does to short time frame traders. Short time frame retail traders are always looking for the big move, and the big moves happen at extremes. Most of the time, they're anticipating a big breakout so that they can take big profits when the market breaks out. So they end up too short near the lower extreme of balance, and they end up too long near the upper extreme of balance. Yesterday, we lost 11,000 in open interest. That's short time frame traders anticipating a breakout and then getting stuffed. So when we talk about range bound to breakout rules, we're really acting the opposite of what the majority of the weaker hand retail traders are doing. We're fading the extremes. Everything. Well, my brothers will attest to this. My dad always said the market always looks the best at the top and the worst at the bottom. Doing the opposite in range bound trade is where we're going to find our profitability, because number one, it allows us to limit risk. If we get too deep out of the area of balance, then we may have to go the other direction for a potential breakout. It's all about acceptance or rejection at these levels. So market looks best at the top and the worst at the bottom. Remember that. Think about what you're thinking about doing. Think about what your direct competitors in the short time frame pea shooter gauge like me are thinking and doing. Okay. If you think we're too short in the hole down here, you got to think about that. You think we're too long up here, you got to think about that. All right. So, well, what's this look like on the 30-minute chart? Too short? Boom. Too short? Boom. We're in the middle, basically. Actually, kind of at the upper extreme of the 1, 2, 3, 4 day area of balance. So the overnight high looks important to me this morning. That could be enough to bring a full swing move back up to the high of value or the high of balance, because that's the target. Once we've reached the low of balance, once we've reached the low of balance, let me get this fixed. The target is the other extreme of balance, which brings us up here. We have the benefit of a kind of a smaller area of balance here. So again, the overnight high, the high from 2 days ago, these overnight highs, they all kind of strike me as somewhat important. They're not necessarily strong, like a lot of resistance, but I've got to trade them as resistance until proven wrong. We accept outside of this range, then there's the probability that on a full rotation back to the upper extreme of the longer time frame area of balance we've been in is likely. So we kind of opened in range and in value. Try and stay patient. I'm looking for opportunities at the overnight high or at yesterday's lows if we can get price to move back down to that level. We're in kind of short time frame control here, so some of the short time frame levels are likely to be respected, and be careful with that because there's usually a million of them. So here we go. We're getting a nice push here. We have a weak high. Yesterday was a double distribution trend day with excess at the low, rejection of a late spike, rejection, weak high, weak even high here, and a weak, well, there's still excess here, but it's not a very strong high here. So all of this is boding to be rechecked at some point in the future. Trade what you see. These markets are going to be digesting the information they've got today and looking forward to tomorrow. The NASDAQ. Now the NASDAQ is saying something different. The S&Ps, we added open interest. Yesterday, the NASDAQ lost open interest. We get too short in the hole and we had to cover some of that. It's not a big amount. It's a loss of 1,300 in open interest. And on paper, the auction process performed yesterday better in the NASDAQ than in the S&Ps. However, in the NASDAQ, we've got an inside extended trading of a range right now. So again, the market looks better on the 30-minute chart. We'll see that in just a second. But again, I can't grade this auction because I don't believe that it is necessarily truly underway. I'm not seeing good participation, especially here in the NASDAQ. Here's the 30-minute chart. So yesterday in the S&Ps, value was inside the previous day's area of value. Yesterday's value was overlapping to above. The range was overlapping to above. So on paper, this market looks like it's actually acting better than the S&Ps, but I'm not buying that just yet. In range, in value, no overnight inventory, in value, stay patient. I should just print that and just put a stamper on my notes in these types of situations. The number came out. There's a little bit of a chill in the air now about that GDP number and what that's going to say to the FOMC. We got to digest all this. Traders have short memories. And as soon as this is all digested, the market can kind of just recover and go back to doing what it was, which is now putting in higher lows and higher highs. And where does this break? Well, it breaks all the way back down to this trend line and the weekly kickoff low. Here's the TPO chart from yesterday. Normal variation, IB extreme. I think we went 5 out of 7 for initial balance extremes today. Again, a week high. We took it out. We did not finish the repair down to this level here. And we're opening in range and in value. So I'm going to try and stay patient. We don't really have any, we have pending home sales left for us to look at today. And other than that, we'll be freewheeling until tomorrow when the PCE numbers can come out. So we're right in the middle of the range from yesterday, right in the middle of value. Stay very patient. The opportunities are likely to come as the day goes on. Let the market show you its initial range and then focus on those extremes. So we get a nice move down here in gold. And I was just talking about how yesterday the volume dried up. We lost 2,000 in open interest in gold. So I was kind of looking at this as a potential slowing of the downside auction. Well, things have changed a little bit with this GDP number. The gold has tested, in essence, right down to 1902, which is the weekly kickoff low. Missed it by 5 ticks so far, which this may be providing opportunity for us. But the structure is, of course, still lower. So we're not thinking we're looking for opportunities to begin to buy weakness here just yet, unless we get a good opportunity down here at weekly kickoff low, because if for the only reason it allows us to limit risk. This is a longer time frame level where I believe longer time frame traders will come in to adjust inventory, whether that is new longs to the upside or short covering to the upside or new selling below that number or long liquidation below that number. We'll see how this weekly kickoff level treats us here by the end of the day. Some days they're wonderful. They're very repellent and they offer great opportunities. Sometimes not that often, but sometimes they just become magnetic, and it takes a while for the longer time frame to make any decision with regard to adjusting the inventories. Here's the 30-minute chart. That GDP number came out. Before that, we were kind of looking at an inside the value area, kind of a patient type of day. But the number came out, and obviously things have changed. We're getting one of our biggest reactions from that GDP number here. From gold. We're getting that test of weekly kickoff low. We did not open with a gap, but we have now shown rejection of value and price at higher levels. It's going to be interesting to see what happens down here at this weekly kickoff level. All right, here's yesterday. Normal variation, neutral day as far as the extreme day, I should say. Initial balance is neither the high nor the low, and the point of control and the volume point of control are in the very upper extreme. So this is a normal variation, extreme day, very weak high. At least there's some excess at the low here, but we have now new information. Here's what happened when you open outside of a repair type of situation. You get the range extension and an overlapping to lower range. Just watching to see what happens down here at this low. It's a very interesting spot we've got here. What about the euro? So still range bound. And this morning before the number came out, we had pretty central location as far as where price was. That has now changed. Okay, we were looking at range bound central, losing 1,200 in open interest yesterday, relatively inert. On the 30-minute chart here, we had some overnight inventory that was looking kind of long. Well, obviously, that's now been taken out. We've got a previous gap down here that we've checked in regular trading hours. We've checked this naked point of control. All we have down below is last week's low to possibly bring us some support, or weekly kickoff low. So the market out of balance now. But without some sort of day time frame reference, here's that trend line with that breakout that ended up, that bull flag breakout that ended with one really good up day, and ever since then it's been back to range bound activity. So I'm going to be, I think, patient because we are overall in range bound activity. Look for opportunities at extremes and at structure levels in the day time frame. Here's the TPO chart. Extremes on excess on both sides. The IB, neither the high nor the low. Normal variation day, neutral stance. Markets looking for new areas to facilitate trade, and it may find it lower here. What I do caution for any of these markets that become directional is don't fight it. Don't try and pick bottoms. Don't try and pick tops. The retail trader has a tendency, well, I can't sell it down here, which may be the right thing to do, so I'm just going to try and find a way to buy it. And they buy it, and they buy it again, and they buy it again, and they buy it again, and they buy it again. And they just end up getting run over. So the markets that are directional right now, if you can't get in the direction, then don't do anything. Wait for structure to develop throughout the day, and then find your levels that allow you to limit risk, because it's all about risking less, risk little. Here's the 10-year taking us through the weekly kickoff low. If you could see my sheet here, it says balance for the medium time frame, but now we're at risk of changing that. All right, we added 17,000 in open interest on the upside yesterday on decent volume. We may have begun to feel some form of, or some faction of time frame of speculators that are now taking heat on longs. As a matter of fact, if you are long, you are taking heat on longs now. So we added 17,000. Volume is okay, and we're going to be seeing a little bit higher volume today, it would seem. Here's the 30-minute chart. We've broken out the low of balance, right? So the idea is to go with breakouts from balance. It's going to make it very difficult. And again, I caution you, if you aren't in this, if you can't find a way to get short, the last thing you want to do is to start to try and pick bottoms. if you have been able to pick a bottom in this regard before, you've been nothing but lucky. But don't put yourself in a situation where you can, kind of step in front of a freight train and get run over a bunch of times. Be patient. If you can't get in the direction, don't do anything until you can find some sort of structure to lean on to limit risk. Please don't fight a directional market. Here's the TPO charts. Excess on the high yesterday? No. Yes. Yes. The market was so range bound. It was very difficult to trade. I kind of welcome this change in market state for those of you that are trading the 10-year, because it's going to offer you some more opportunities. Okay. Let's take a look quickly at the natural gas. So we had a continuation or an attempted continuation above the late spike that occurred here last Friday, leaving a doji, not a very confident thing. The volume was lower. Here's the 30-minute chart. We added 1,700 in open interest yesterday on an attempted breakout of a bull flag that completely fell flat. We closed below it. This lower trend line now offering resistance. Okay, here was that late spike. We held above it, but again, it wasn't a very confident move. We started pulling back to the base of the late spike. Yesterday, we traded to that base of the late spike, where we began to build value. So value moving lower. This bull flag failing, now showing resistance. Again, in directional markets, don't try and fight them. Don't try and pick bottoms. Not necessarily feeling that this is a very directional market, but I think this trend line settlement value low, the low of the range from yesterday, are going to be somewhat pivotal for us here in the natural gas. We did have a late spike yesterday. Okay, this late spike, base of it is 2,683, right up here, just above our overnight high. Isn't that funny? So the market is telling us for now it is accepting lower pricing. So I would be looking for opportunities to sell strength up until we get to this base of the late spike. If we start to see meaningful participation above that, that can mark rejection of lower pricing, and you better watch out if you're going to try and remain short. But for now, the main nuance is, we had a late spike to the upside here the other day. We had a late spike lower, almost a late spike lower yesterday, opening, accepting, price moving lower. Now we've got another late spike, opening, accepting lower pricing. I'm looking for this market to go lower. This is my ruling reason for a trade today in the natural gas, is the fact that the late spike, we're accepting lower pricing. Look for opportunities to sell strength against levels that you can limit risk with. Okay, so make hog money here in just a few minutes, and then 10 o'clock, the mental game of trading with Jared Tendler. We'll look forward to seeing you there. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. Make sure you stay kind to yourself. Inner dialogue is so crucial to successful trading. Stay positive with yourself. Be kind to others, and I will look forward to seeing you. I got a thing here with my camera. I'll look forward to seeing you and make hog money in the Jared Tendler session. And if I don't see you, have a great day. Trade well, get out there and profit, and we'll see you later on.